Welcome to The Week Ahead, a podcast by SBM Intelligence. I'm your host, Veronica Pana Igube. Every Friday, we explore stories that are shaping the African continent. This week, it was reported that the Trump administration plans to slash a $555 million in funding for the African Development Bank, its main development fund, as part of its sweeping costs to foreign aid. What does the future hold for the African Development Bank? The Renaissance Energy halted all shipments through the Okordia-Rumuekpe pipeline in Rivers State due to the suspected sabotage-induced spills. Meanwhile, ExxonMobil has pledged a $1.5 billion in deep-water investment in Nigeria starting Q2 2025, with a final investment decision expected later in the year. What are the long-term implications of oil spillage and major investments on Nigeria's environmental and energy future? MTN Nigeria reported a 134% profit surge in Q1 2025, thanks to the tariff hikes that offset past forex losses. Simultaneously, Nigerian banks have raised SMS alert fees by 50%, sparking concerns among customers already grappling with economic hardship. These as the country's retail sector is shrinking, as seen in the rise of neighborhood malls and larger ones. Will the rising costs push more Nigerians towards ever more informal means of survival? Joining us today for insights is Sheyi Owojulube, a policy analyst. Welcome, Sheyi, to the podcast.
Thank you for having me.
It's always great to have you, Sheyi. Let's start with the future of the African Development Bank. We have seen several cuts from the Trump administration, and this is the latest one, which is going to affect the African Development Bank. What do you think are some of the potential short and long-term impacts of these funding costs from the US on the African Development Bank support? Especially for the infrastructure and development programs that it has across Africa?
Well, this decision by the Trump administration is another one to add to the sweeping wave of funds, or should I say foreign aid cuts, that has been implemented so far by the US administration. And recently it was announced that the US government has cut its spending by about 5%, which was one of the targets of the Trump administration. And I'm sure that it's not a surprise to the AfDB leadership, especially Akinwumi Adesina, who faced some resistance from the US when he was seeking re-election as the AfDB president. But the people who are going to be greatly impacted are the low-income African countries who depend on the AfDB for funding, for concessional finance, for infrastructure projects, healthcare projects, agriculture, climate projects. The Akinwumi Adesina's leadership at the AfDB has these five Fs: light up Africa, feed Africa, connect Africa, I think. And so this is going to be a significant blow to the AfDB's projects, because the US is one of the leading funders. I think about top 3 or top 4 leading funders of the AfDB. Right, so this is going to be a major blow. And as with the other foreign aid freezes or cuts that has been implemented by the Trump administration, the question has always been, who is going to fill this hole? Who is going to make up for this money that's no longer coming in from the US? And people are asking, is it the EU? Is it China? That question still remains to be answered, because across the world, the WHO, the UN, several UN programs, the US has cut funding for these programs, and everyone is struggling to find a way to sustain their programs. Some of them have already rolled back or limited the size of their programs. So it still begs that question as to who is going to fill this all. And that's the question we're all still asking.
Interesting, Shay, that was the next question I was going to ask you. And it's interesting that you mentioned China and the EU. So now that there's this kind of a vacuum and a lacuna in terms of the US cutting their funds, now do you think that the African Development Bank should have like a shift of its geopolitical donor dynamics? This is where it opens its doors to China and the EU. Or do you think it's a even bigger move for the African Development Bank to look inwards and try to see how it can now adopt more like an African-led financing model, which will try to cut the dependencies on external donors?
Well, this conversation or this question that you just asked came up at the time, came up in Nigeria at the time when Akinwumi Adesina was seeking re-election to the AfDB, and Nigerians were wondering that, well, is Nigeria not Africa's largest economy? Can't we fund the AfDB, or can't we be the largest funder and all of that? But we all know the state of Nigeria's finances. But apart from that, the reason that the US gave for this move is that the AfDB is not currently aligned with US priorities, which is what the Trump administration has said, that it has to be America first. We know that they're pushing an America first agenda, right? But we then need to wonder, how will China play? How would China come in? What would China's role be? China also has a number of initiatives already ongoing for African countries. They have investments, they have loans, projects across Africa. And China itself also has sort of a US problem with the tariffs and the trade wars and all of that. So I can't say emphatically that China can fill that hole that the US is leaving. No. But what will definitely happen is that the AfDB would need to readjust and re-strategize, because normally the projects that the AfDB engages in are long-term, no, multi-year projects. Let me put it like that. Multi-year projects that span 3, 5, 7 years in some cases to have great impact, or to achieve great impact. And so and you know that anything that spans or that exceeds 12 months would require great funding. And so, funding that the AfDB can afford. And so when one of your largest donors is cutting back, then the AfDB also has to re-strategize and maybe refocus some of its priorities or some of its projects, maybe suspend some, look for funding elsewhere, which may not be come by at this point in time. And that's it. It's going to certainly have serious implications for the AfDB, and we wait to see how it all plays out.
True, I'm sure that everyone is, looking forward to how the AfDB would respond. Let's move over to our second story. We've seen the Renaissance Energy halt all shipments through the Okordia-Rumuekpe pipeline in Rivers State due to suspected sabotage-induced spillage. I know we've had, quite a number of attacks on, you know, pipelines. How can this reoccurring oil spillage and sabotage incidents, how is it undermining Nigeria's energy ambitions? Obviously, investor confidence and I mean environmental health as well.
Well, when investors think about Nigeria's oil sector and they are trying to make an investment decisions, one of the risks that they identify is the risk of sabotage and vandalism. And we are quite familiar with the history of militancy in the Niger Delta. We know that several groups have come up, Masob, and the likes have come up in the Niger Delta. And it is interesting to note because when this particular pipeline that was attacked was recently acquired by Renaissance Energy in March. That deal was completed in March. And now we're in May and the pipeline has already been attacked. When the conversation about the exit of IOCs was ongoing, one of the things we identified was that if the indigenous oil companies take over these assets, these oil assets, then they can possibly better relate with the host communities and the risk of attacks would be reduced. But this is maybe saying perhaps there may need to be a reconsideration of that. But in all, it's a major what's the word I'm looking for?
Kind of
It's
worry.
a major risk. Yes, it's a major risk and a major worry. And of course, you have host communities who no longer have clean water, fishermen who cannot fish anymore because of oil spillage and the damage to the environment. And also because the remediation efforts have been slow. And so the cleanup of oil spillage has not been as fast as it should have been. So these are some of the things that add a plus or cause investors to mark up the risks that come with investing in Nigeria's oil sector. And that's why we've seen the international oil companies favor offshore oil fields over onshore oil fields.
I mean, I do agree with you because I mean we've had the whole case of the Oboni cleanup. It has gone on for quite a number of years back and forth. And we're seeing that, it's easy to I mean, in 1 minute you can destroy a pipeline, but the effect that it has goes on for years. So now we see that ExxonMobil has, put in, I mean, this is an investor now that is, bringing in funds, and we're seeing a pledge of 1.5 billion in deep water investment in Nigeria, and it's going to start in Q2 or has started in Q2 2025. With this investment on the horizon, what do you think that Nigeria should prioritize to ensure that we both benefit this economically and environmentally?
Well, for this, it's a test. Should I say it's a test or it's testament to what the government is still trying to do about making laws that would attract investment. This ExxonMobil has proposed a final investment decision in the third quarter of 2025. And they're still waiting for the final approval of the field development plan. And so this follows, like I said earlier, that international oil companies are favoring offshore assets, deep water offshore assets over the onshore assets, right? So we should expect that we would see more of these investments. As to what Nigeria should prioritize, well, there still is the talk of the uncertainty with regulation and laws in Nigeria, and investors in that sector could do a bit more on clarity on what exactly the government expects of them. The relationship with the NNPC also, now that the NNPC has new leadership, it remains to be seen about how they will draw in more IOCs and hold them up to standards to ensure that the IOCs, the IOC, that's what I mean, do not neglect, do not act in neglect and neglect the regulatory standards that are needed. So NNPC together with the regulators in the sector, right? And so, as always with new investment comes the anticipation and expectation that Nigeria's oil output will increase, and that will translate to more revenue for the government, which will then also translate to a better standard of living for citizens, because the government now has more money at its disposal to invest in infrastructure and social development. And so, while that is going on, it's also that the regulators and the participants in the sector abide strictly by the regulations and international standards to ensure that the environment is not neglected and abused.
I mean, it's interesting. I will just take you a little bit back to the discussion we had on the Renaissance energy. So you had said that this deal was in March, and they started using that pipeline, and then boiled down to a couple of months later, we're seeing an attack on that pipeline. Do you think that what do you think might be the cause of the recent attack? And do you feel that having a local refinery capacity being built and empowered in Nigeria will reduce some of the issues we're having with pipeline vandalism, and our environmental risk as well?
Well, to start off from where you ended your question, building or improving our local refining capacity may not cause a decline in pipeline vandalism. And that's because there are two different things, right? If you remember back, or if I can take you back to when Tony Elumelu, chairman of Heirs Holding, was complaining about pipeline vandalism, and he said from the oil field, they probably, now this is hypothetical, from the oil field, they would pump about 50,000 barrels into the pipeline, and when it comes to the discharge points, they would only get about 30,000. So along the way, 20,000 has gone missing. Now, this is just an hypothetical scenario. I'm not saying that's exactly what happens, but
Yeah,
you get the picture that I am painting,
sure.
right? So one of the things that we were talking about when the IOCs, that's the international oil companies, were divesting from the onshore assets, was that the integrity of those pipelines should be tested and ascertained, because some of these pipelines are very old, and so they are vulnerable. When you have been using something for several years, it's already vulnerable, and the integrity, I'm trying to look for a less technical term, but it's not coming now. But the strength, let me just use the strength of the pipelines. To some of those pipelines would have been corroded. And so it's easy to break off, it's easy to be tampered with, and things like that. So I'm not sure, and I'm not saying that anyone has come to claim responsibility for the attack on that pipeline. Even regulators say they will look into the situation and isolate it and know exactly what went wrong. But two things are at play here. One is that Nigeria's pipelines are old. Second is that the host communities still want better. They want to be treated better because they are the ones. So, which was what the activism and the militancy was about back in the days when it was at a height, was that they believe that we own this resource. It's from our land, and so we deserve to be treated better. I cannot own a pipeline, or my land cannot be housing crude oil. And when the crude oil is being brought out and sold, it spoils my land such that I cannot farm, I cannot fish, I cannot drink the water. Do you understand? So these are the foundational issues that contributed to the militancy back in the days, and these issues still exist, and we can see how it played out when the Bola Tinubu administration announced its intention to restart crude oil exploration in Ogoni, where Nigeria's crude oil exploration activities started. We saw how the CSOs and the local communities kicked against it because they said Ogoni has still not recovered from the several years of oil spillage, and the government wants to restart crude oil exploration there now, and they kicked against it. So these foundational issues still exist. Having a local refinery will not solve those issues. Those are issues that deserve to be addressed and not to be swept under the carpet.
I mean, it's interesting, addressing the root cause of a problem will, just ensure that you give solutions that, as you recommended, they want, better, amenities, they want to be treated better, and that's addressing the root cause. Let's move on to our final story. So we've seen MTN has reported a 134% profit surge in Q1 of 2025. And this is as a result of the tariff hike that we saw the Nigerian government approve. We've also seen that Nigerian banks have raised their SMS charges by 50%, this sparking concerns with customers as well. Now, this recent tariff and fees hike by major service providers and banks, do you think that they are affecting, our digital and financial inclusion, especially for low-income Nigerians?
Well, we already said it, that the tariff hike was a long time coming. There is a bad habit, if I can put it as such, that we have in Nigeria, where we leave prices at a certain point for a long time, irrespective of what our inflation rate is, irrespective of what the cost of production is. And then one day we wake up and just implement a huge hike rather than incremental hike over the years. And that is when it becomes a problem, which is what played out with the telcos. It got to the point where the telcos were complaining about their business models no longer being sustainable for the government to approve a 50% tariff hike. And that, as the ripple effect, is what we're seeing with the banks and all of that. Right. But as to how it affects the customers and whether it deepens financial exclusion, if you look at the two arms to it, right? So the call rates, SMS charges, the SMS charges would affect with your transaction alerts, whether credit or debit. That affects that part. And a lot of Nigerians, or some Nigerians still subscribe to the SMS alerts, but some people just rely on email alerts, which are free, last time I checked, from the banks. For the call rates, it would affect the short code, the people who use short code to do banking transaction. And a lot of people have moved away from using short code for banking transactions because of security reasons and because the performance of the mobile apps have improved significantly from when it first started. And so really the people who will feel this are people in the low-income communities, and these people already have alternatives like OPay and money point that comes to their level and sort of does retail banking at their level. So really, I don't think it's a cause of concern for them. However, we can expect that this will have an effect on the economy, on formal retail, because the fact that prices have increased means that people will look for alternatives that are cheaper and affordable for them.
Lastly, we've also seen that the country's real retail sector is shrinking, and there's kind of a rise of the neighborhood malls. Um, with this formal sector shrinking or on the decline and the neighborhood malls on the rise, what does this tell us about the shifting consumer behavior and urban economic resilience?
Well, with Nigeria's inflation rates stable at over 20% for several months now, Nigerians have substituted and they have shunned the formal retail sector. Those are the malls, the big malls with air conditioning and all that, and moved back to the neighborhood stores, right? Because those neighborhood stores offer competitive pricing. And another thing is that those neighborhood stores offer credits that formal retail would not offer. For example, no one can go into a ShopRite and say, let me buy a tube of toothpaste and I'll give you the money at the end of the month. No, but the neighborhood stores can give that. And to take you back to a report that SBM Intelligence did some months back about how a lot of Nigerian households are living on debt, it's because the cost of living has increased. It shows that people will naturally gravitate towards where they can get some form of credit that can be repaid at a later date rather than patronize formal retail stores, right? So that's one thing to look at. And also the exit of major retailers like ShopRite as kind of, should I say, giving room for a sort of distrust, because Nigerians have an appetite for foreign things, or well, used to have an appetite for foreign things until pricing caused a substitution and changed in appetite. And so people are wary and are not sure of the quality of what they will get at those stores, at those formal retail stores. And so they would prefer to stay with their neighborhood traders who will offer credits, offer competitive pricing, who the manufacturers even relate with the manufacturers and the distributors relate with on a daily basis. And so you're more likely to get a very tiny sachet of sugar at your neighborhood store rather than in formal retail. So formal retail, or the decline in activities at formal retail stores, are a combination of several things. Nigerians are looking for credits. They are looking for smaller packets of things, sachetization of the economy. So they're looking for smaller packets to buy in small quantities. People are no longer buying in bulk as they used to before. So there is that. And naturally, it would have an effect.
Thank you so much, Sherry, for your brilliant insights. That's all for today. It's always a pleasure having you on the podcast, Sherry.
It's always great to be here.
So, all our listeners, this podcast is by SBM Intelligence. You can access our podcast by searching for SBM Intelligence anywhere you find podcasts. If you haven't already, be sure to subscribe, like, share, and let us know your thoughts in the comment section. For deeper insights into our work, you can visit our website at sbmintel.com. Remember to connect with us on all our social media platforms. You can find us on X, Facebook, Blue Sky, and LinkedIn at SBM Intelligence. Thank you for tuning into the week ahead. Join us next Friday for more updates shaping the African continent.